Joining us now in a CNBC exclusive, General Mills CEO Jeff Harmening. Jeff, welcome. It's good to have you.
It's good to see you, Sarah. Thanks for having us on.
It's almost hard to believe that you're able to get so much pricing power right now with some of the questions out there about the economy. What does that look like?
Well, the consumer's in a really interesting place right now. On the one hand, we have full employment, which is a benefit to consumers, of course, and savings rates still remain above pre-pandemic levels. On the other hand, consumers are nervous about inflation, and we see inflation broadly across the economy. Just as you well know, the Department of Labor came out with a consumer price index just a couple of weeks ago and shows that inflation is, roughly about 6%. And certainly as a food industry, we're not immune from that. We've seen our costs go up dramatically over the last couple of years. In fact, it's volatility I haven't seen in my 30 years or so at General Mills.
But aren't those costs starting to fall, Jeff, or at least flat?
What we see in the back half of our fiscal year, which ends in May, we're still seeing double-digit inflation. Really driven by labor and energy, and still to a degree commodity costs. But what I will say is that we do see the rate of inflation starting to decline over the next 12 months. In fact, we just gave guidance a little while ago that said that we expect inflation to be, which is to say our costs going up, about mid-single digits over the course of the next 12 months. And so we don't see an environment where there's not inflation. I suppose the better news is that we've gone from 14 to 15% cost increases this year to us, to where we see mid-single digit costs are going up next year. So the rate of inflation we think will slow, but there will still be inflation.
But is there a point where you just can't keep these high prices going, where the consumer will push back?
The great thing about, the products that we serve, they're mostly at home. And when consumers get pinched, and which they're starting to feel now, what happens is consumption shifts from restaurants and away from home eating to at-home eating. And the reason for that is that a meal at home costs about 3 times less than a meal out. And so that's the first place the consumers go. And even now, even with the inflation we've seen and the costs we've seen, a bowl of cereal in the morning, which has, whole grains and vitamins, is about $1. Even our Blue Buffalo pet food, which is a natural and a premium pet food, it costs about $1 a day to feed a medium dog. I mean, if you have a Great Dane, probably going to be more than that. But for a medium-sized dog, it's about $1 a day.
Long-haired Chihuahua in this household, so not nearly the volume.
You're saving a lot of money there.
Yeah, we are saving
about
some
50
volume.
cents. Yeah, about 50 cents for you then.
Jeff, is there a scenario you're running in your models that looks at a dramatic drop-off in inflation? And I guess if so, what kind of odds are you giving it?
There's not really a scenario we see where our costs are going to go down dramatically. Certainly, we've seen commodity costs like grains, whether it's oats or wheat. So those costs have come down and are relatively stable. But what we see are labor costs continuing to rise. The same with some of our specialty ingredients like oils or starches or packaging. And so even though there are, if you look out in the market, you might say, hey, grain prices, haven't gone up. That is true, but there are a lot of other parts of our basket, whether it is labor or energy or other things I just talked about, that we still see continuing to rise. Hopefully, for the sake of the consumer and for our business, they don't rise at the same rate, because one of the things that General Mills has been very good at over the last decade or so is productivity. And we're able to offset a lot of costs through productivity. In fact, we save about $400 million a year in productivity. And, that's our first line of defense to increasing pricing. So to the extent that costs don't go up too dramatically, a lot of that we don't actually have to pass through to consumers. We can save that in productivity. We're hoping that'll be the case over the next 12 months.
Are young people eating cereal again, Jeff? This was one of the biggest knocks against your stock and your performance in recent years leading up to the pandemic. Has it changed?
Yeah, our cereal sales are growing really well. We've grown our cereal sales for 5 years in a row. We've gained market share for 4 out of the last 5 years. And we have some really good introductions. I mean, who knew that mini versions of Trix and Reese's Puffs and Cinnamon Toast Crunch would be a big hit, but they really are. So our cereal sales have been really robust, not only here, but outside the U.S. as well.